All right, let's see if that works. It should work. I hope you can see me okay, hear me all right. Put it into the chat, let me know. Okay, I think everything is working fine. All right. Good morning, good afternoon. It is the 6th. No, it isn't. Sorry. It is the 9th of June. I saw 6th there. It is the 9th of June, Monday, the 9th of June, after the non-farm payrolls or non-farm employment change on Friday last week. So I hope you all have been doing good, doing great, doing fantastic. Hope you're all well. Hey Dennis, how you doing? Good to see you on the session. Welcome back. Welcome back. Hey Hungry Foodie, welcome back again. Good to see you on the session. Yes, so if you are on the session, do remember to drop a message. Say hi. Let me know where you're joining us from. As usual, I'd love to find out. Love to see where you guys are tuning in from. If this is a public, but we usually run this session at 3 p.m. for the Elite Navigator members only. But today it is a public session. So if you are new to the session, do drop a message and say hi. Let me know that you're on. At any point, if you have any questions, put into the chat and let me know. And you can help me out massively by remembering to click on that thumbs up button, and the subscribe button if you haven't already. Very often, a lot of people, we got a lot of people here, but no one clicks like or that thumbs up button. All right. And I think if you keep spamming into the chat, keep chatting away, the more activity possibly gets us a little bit more people aware of the stream and onto the session as well, right? So do that for me. And if you haven't already, the link for the mailing list is there as well. Do remember to sign up. Right. Right. So hey Jimmy, how are you doing? I hope you're well. How's the house painting and the fishing going? Hope you had a good haul. Um, Good morning, Diana. Good to see you on the session. So, okay, today's not tonight. Today's session is so typically we do it at 3 o'clock for Elite Navigator members only. It's on H1 time frame, looking at intraday or daily intraday setups, H1 kind of setups, right? Yeah, we need more chit chatter around. Then, so usually we have H1 kind of setups. We have daily analysis on the for Elite Navigator members, and this is not private. Today it is private. We're going to be looking at trades on H4 kind of setup, and then I'm going away. I'll be in South Africa. So actually, if anyone was watching from South Africa, drop a message. I can't promise that we'll meet up. I'm on a whole schedule, so do drop a message. Let me know. All right. So yeah, I'll be in South Africa for about 2 weeks. So short breakaway again, but we're looking at H4 kind of setups for the week for about 2 weeks, kind of time span. All right. So hopefully, I identify the right kind of setups, the good kind of setups, the profitable kind of setups. I'll leave that with you guys. I come back 2 weeks later. You've all made money. You're happy. We continue our sessions again. Um, Dennis just asked which part. I don't know. The southern southern part. Joburg. I'm on safari. I don't know where. And then all around, I have no idea. It's all itemized on a sheet of paper. I've looked at it many times. I don't remember any part of it. I know that I have to turn up and everything is going to be taken care of. So no idea, but I'm pretty sure it will be fun. Oh, okay. Fresh seafood at Cape Town. I'll bear that in mind. I'll look forward to that. I love seafood. So I will go check that out. Thanks for the recommendation, Dennis. I will do that. Talking about seafood, Jimmy's fishing is great. Fishing is always great. But painting the 5.5 meter high ceiling is not fun. You gotta do a bit of the paint. Gotta do a bit of the paint before you get the fun. Hey Spiros, how are you doing? So I'm just catching up on the chat. I haven't chatted with everyone for so long. I'm just catching up on the chat. Just bear with me for a while everyone else streams in. Then we'll get to analysis. Okay, promise. Hey Spiros, good to see you. How are you doing? Hope you're well. Pink. Hey Rita, good morning. How are you doing, Rita? It's like some crazy timing that Rita tunes in where she is. So it's super appreciative that all of you guys are tuning in at this time with me. All right. Pink gin. I love gin. I love gin, and I love pink. I love gin as in the one with the G as well. So I will check that out. Seafood and gin sounds like a perfect match. Hungry foodie, yes, we will have to catch up. Yes, we were supposed to catch up the last time round, um, in Singapore, but yeah, we will have to catch up when I'm back and be away for a while. Okay, now. As I promised, we caught up with the chat. Do keep the chat going as well. If you're on the session, drop a message, say hi, let me know where you're joining us from. Particularly if you're in South Africa, in the region, because I'll be there by tomorrow. Okay, but let's get back into the analysis. Now, last Friday, we did a stream for the Elite Navigator members. And I was saying, hey, I'm thinking that NFP would be about 140K. Right, at first, I was sitting there, and I'll give you a bit of a recap. I was sitting there and I was looking at what was it? I was looking at JOLTS job openings at 7.2 to 7.39. I thought, hey, looks like it's good news. And then on Wednesday last week, we had ADP non-farm, which was terrible because it went from a 62 revised down to 60 and then got released at 37 only, at only 37K. So I thought, JOLTS job opening is not great. JOLTS job openings was good. It's hot in here. And then ADP non-farm was not great at 37K. And then on Thursday, unemployment claims was better, but not fantastic, right? Not better, but not terrible, right? At 247K, it's supposed to be a smaller number. So 247 is not a terrible number as well. But there was a rise in unemployment claims. So you think about it, JOT is reasonably good, ADP terrible at 37, claiming for unemployment benefits at 247K, a little bit increased. I sat there thinking, hey, non-farm employment change. It was a 177, expected 126. I was thinking this might be terrible. This could be terrible. We were debating and thinking about it between, I think it was I think I was thinking about 100 to 120 or 80 or something like that. I think Robbie said, I don't think Robbie's on the session, if not he would have said hi already, but Robbie was saying like 88, right? But when we went through all, we looked at the dollar index, we looked at how it was moving, I thought, it looks like, and this was what we did last Friday, right? It looks like NFP could be about 140. So very happy is that I was expecting 140 because it got released at 139. This is as close as I've ever been to predicting the NFP with somewhat of accuracy. I'll substitute the word accuracy for luck. But so on Friday what we saw was non-farm employment change for the US was 139K. right? It was 177, got revised down to 147, and then it came out at 139. So the worry here is that it hasn't grown by that much. Hasn't grown by that much. While unemployment rates is at 4.2, stayed steady at 4.2. Average hourly earnings increased a little bit. It's like slight inflationary growth on wages, wage inflationary growth at 0.4%. While employment change for the Canadians was at 8.8, and unemployment rate for the Canadians went up from a 6.9 to a 7. So that's what happened, and you see that with the release of this news, generally quite a good news, quite a good employment number for the US. The dollar index, I'll show it on a H1 time frame. Put that there. No, it's not. Okay. The dollar index on H1 time frame, this was the release of the news, right? The news was released at 8:30 p.m. The hour, which was at 8 here, it was at 98.97, 98.98, right? And within the hour, as it got released, it shot up, closed the hour at 99.14. Next hour shot as high as 99.35 before it was widely outside of the Bollinger Band, came right back in at 10, set across, and this morning on Monday, it's pushed down. It's continued to push right back down again, almost to the starting point at 10 a.m. this morning, and it's been pretty much sitting right across. Now looking like it might threaten to push up again, but it's sitting right across now, just below that 99 level. This was where we were on Friday last week when we last spoke. So it's pretty much unchanged from Friday to now. The big reason behind this pop and a retrace is it popped up. We know why. Employment numbers, because of employment number data release. Good employment data number release. However, a very public spat disagreement, sorry to say shit slinging between Trump and Musk, President Donald Trump and Elon Musk, seems to have cast a little bit of doubt and uncertainty and weakness onto the dollar, right? A bit of doubt, uncertainty, and weakness on the dollar, and that's why we've seen it pull back down. The effects of the dollar, of the strong employment numbers, faded, and it's pulled right back in. Other reason as well is a overall downward trend on the dollar index. Okay, so that's what happened on the news on the H1 time frame. Now we're back to the H4. Any questions so far? Let me know. Put it into the chat. In the meantime, hey Lazarus, how are you doing? Good to see you on the session. Okay. So that's a non-farm which saw that pop up, right? It kind of played out to where we thought. It broke above 90. It went up to test 99.3. It came up to 99.3. Couldn't break past that, which is 38.2 level. Couldn't get up to that 99.6 level, unfortunately. Would have loved to see that before coming back in. So it popped up, set across, come right back in again. If you have the TSRI MACD, it looks like it is on the H4 time frame, looking like it's trying to cross over to resume that downward push. Okay, too many stuff on the charts. Let's take all that away. Now on to this week. So let's have a quick look at what's up for this week. Today, Aussies on a bank holiday for the King's birthday. All right. Not all of them are observed, but King's birthday today. We had the Chinese CPI, didn't do too much. And we have the Swiss, the Euro, French, and the Germans on a bank holiday as well because of Whit Monday. I see this every year, but I every year I say I don't know what Whit Monday is, and then I go research about it. I say I have to remember, and then 1 year later I forget about it. I'm pretty sure it's a memorial thing, but totally forgot what Whit Monday is. But the German, the French, and the Swiss are on a bank holiday, and also that's kind of reason why we're seeing markets um, pretty consolidative this afternoon, right? Following on from that, tomorrow we have claimant count numbers. So on Tuesday we have claimant count numbers for the UK. We have average hourly earnings or average earnings index for the UK. Employment numbers. Claimant count is number of people claiming for unemployment benefits. From a 5.2 to a 9.5, it's not a huge number. I mean, it used to be like 2.8, 7.9 to 44. So it's huge. A climb is not going to be too crazy. Unemployment rate is expected to go from 4.5 to 4.6. A slight weakness, possibly going to drive the employment data is possibly going to drive some weakness on the pound dollar. But I think the directional bias of the US dollar is still going to drive the other major currency pairs. Now we have on Wednesday the US CPI, US inflationary growth data. CPI, I focus on the year on year. It was a 2.3. It's expected to increase slightly to a 2.5. Remembering again that the Fed Reserve's mandate is to keep inflationary rates, inflation at 2.2 to 3%. So it's at 2.5. It does climb up to 2.5. Looking at the Fed Watch tool here, the meeting on the 18th is a 99.9% chance that they'll keep rates on hold. No rate cut expected for the meeting ahead. A slight 0.1% chance of a rate hike expected for the meeting ahead. Most likely on the 18th of June, we'll see it stay at the current rates. Yesterday and today, Pentecost Day. I'll take your word for it, Rita. I'll take your word for it. Another thing for me to research. I kind of have a hint, but I'm not going to say what I think. I'm just going to embarrass myself. So I will tell me more about the Pentecost Day in the chat if you can. If not, I'll research. It's piqued my interest, so I will research about that after the session. I think it's got something to do with I think it's got something to do with Monday. Okay, so CPI, I think a 2.5 is reasonable. I think maybe even a 2.6 is reasonable as well. A small inflationary growth with all the uncertainty and the the risk of tariffs and the increase of tariffs introduced by Trump. The big talk about inflationary pressures from that is going to come through. It's taken a while, but it's going to come through. It was announced in April. So we had April 2nd. So we had May, and then now we have June. So it's taken a while, but I think we're going to start seeing that increase in inflationary pressures, which is going to lead the Fed to keep rates on hold. So no big surprise here, leading to no big surprise here. GDP, US PPI. Again, look, PPI month to month from a minus 0.5 to a to a 0.2 on PPI. I don't think again, it might bring a bit of strength to the dollar on that if rates keep higher for longer, maybe. All right, and then we have consumer sentiment on Friday. Through to next week, we have the BOJ. I hope they don't do anything. I don't think they're on the cards to do anything at this point, but you never know with the BOJ. I think the yen is at a reasonable place for them to keep rates on hold at this point. Retail sales for the US, CPI for the UK, and then we got the Fed funds rate, which they'll keep on hold at 4.5. So it looks like at this point, the risk is that, it looks like there's going to be a lot of news. It looks like we're going to have to see a lot of fall. But like next Thursday, right? Like next Thursday, the BOE just cut rates at the last meeting in May. They're unlikely, not saying that they won't, but they're unlikely to cut rates again that quickly. So that's going to stay. The Swiss National Bank is at a 0.25 already. Are they going to be the first ones to get back to zero again? Yes, maybe, but the last time they cut rates, it didn't do too much to the Swiss franc either. These guys are going to stay on hold, and these guys are a little bit of an unknown, but they're at a position of that they're most likely going to stay on hold as well. So next week, I know I'm projecting into quite far ahead. Next week it's going to be a little bit tricky because there are going to be central bank announcements from the BOJ, the FOMC, the SMB, and the BOE. 4 central banks announcing, and 3 of which will be on the same day. Gonna be choppy. I don't think it's going to change directions in any particular direction, but it's going to be choppy. Okay, so that's all the fundamentals for the next 2 weeks. So news and outlook for the next 2 weeks. Any questions, put it into the chat, let me know. Thanks for that, Rita. Rita says Pentecost is a Christian holiday celebrated 50 days after Easter. You don't just learn about trading here, you learn about Christian holidays as well. I'm totally embarrassed that I don't even know that. Not something I celebrated, but okay, I'll read more into that. Okay, so now with that, let's look at the dollar index. I know I ramble on a little bit too much, but I kind of enjoy it. What did deny? Okay, so that one's done. Let's take all that away. That one we'll keep. That one, let's keep it down to here. Okay. Okay, so now we're looking at the dollar index on the H4 time frame. Okay. Firstly, downward trend line is still holding prices to the downside. Big major support level here. At 98. All right, big major support level here at 98. And the last time we got into this region was in March 2022. Right, where it bounced off 90 around this 98 level to push to the upside. So now coming back to the current, what we're looking at here is that firstly, this is the crucial point right now, right? This 4-hour candle is the crucial point, because if this breaks Maybe it closes like that. It's breaking already. It's breaking now, right? If this breaks or closes below this point along that Bollinger, we're going to see firstly on the dollar index. Hey Sunil, how are you doing? Good to see you on the session. Dollar index is close below 98.90 around here, right? Close below 98.90 could should trade down to 98.60, which is down here, right? If that breaks, then we have 98.34, 35. Below that 98.35. Okay, that's what I'm looking at. I would like to see it come down to this 98 level. I'm not convinced that it will, but on H4 more possibly. So what I'm thinking is this: it'll come down to this 90, close below this 98.90 level, trade down to 98.60. Below that, it'll come down to 90, maybe a bit lower, 98.30 kind of level, retrace, and then push down to 98 round number. Then maybe we'll see a big retrace back up again that way. Okay, so now I kind of need to put that into words. So close below 98.90, should trade down to 98.60, below that 98.35, possibly round number support before rebound to bearish trend line. There we go. That took a while. So close below, if it closes below this 98.90 level, which is down here, right, we could see it trade down to 98.60, and then below that 98.35. I'm thinking this might be a bit of a bounce here later into the week, and after it comes back down to 98 level here, and then the FOMC, maybe like FOMC or something, we might see it push back up again to the trend line and then maybe come back down again. But that's a bit too far of projection. So right now, that's what we're looking for. Make sense? Sounds fair? Does it align with your thoughts and analysis? Let me know. Okay. Then with that, we'll look at the Kiwi dollar. All right, so Kiwi dollar, this was what we looked at on Friday. That was going to bounce. So we said it's going to come down, bounce this level, test. So it did that. It kind of did. Thanks for that, Hungry Foodie. We did that. We saw that. It did that as well. So you got 1 right, 2 right, 3 points right. 4 just went a bit higher than I expected. Okay, so this could have been a small grab here, but it wasn't great. But it's pushed up. That way. Okay, I don't need this anymore. I don't need that anymore. I don't need that anymore. I don't need that. Actually, it's quite straightforward from here on the Kiwi. Is that what I would like to do from here is to give it a little bit of space. Like that. So knowing that the last, oh, sorry, H4. Knowing that the last time, that's why it looks weird. So knowing that last time it came up to this point, had a tail, couldn't break, and came right back in, and that's showing me push to the upside. The dollar index is showing me some potential downside move. Hey Robbie, how you doing? Good to see you on the session. Welcome in. So yeah, we're looking at this push back up. Now let me see if H4 trend line makes sense. There you go. So H4 trend line can still make somewhat of a reasonable sense. What we're looking for here is a break above 6060. The stop loss could be about 30. The take profit will be about 60 to the upside. Not one of my favorite at this point in time, but that's a setup that you can be looking for on the Kiwi dollar. If we're going to see that dollar weakness come right back down, you're looking to buy at 0.6060. You're looking for a stop loss of 30. You're looking at a take profit of 60 to the upside. Okay. Then on to the Aussie dollar. This was the crucial point we talked about. It bounced, it thought about it, it didn't really do anything. It sat there at 6490, thought about it and all, and it pushed back up. Now, the formation of this point is going to be important, right? The formation of this point is going to be important because you can see that it's a level that it doesn't really like, right? 6540. It's tested, it's bounced, it's rejected all the way back down again. I'm going to play a little bit of a devil's advocate, not the, if we are completely wrong, and this, I don't see it bouncing though. I was going to say that, oh, it's going to do that, and then we can see that come right back down. But I don't see that dollar strength coming in. I don't need that actually. I just need those points. I don't see the dollar strength coming back in at this point. It does need to go a little bit more. So now looking at this, beyond this point, we have a very small level here. A big level up there. So that's your 50 to get up to your 61.8, which is here. All right. So if we look at this back to the current, that's kind of what I would think would be more interesting to see. That it stays within the range and it trades within the range. Right. The alternative is that following the trend, it breaks out. You're looking at 6550. 6560. You're looking at a 30 stop. You're looking at a 70 take to the upside. Or I actually kind of like this, so I'm highlighting this again. It is a 6520. A test and a reject, a 6520, a stop loss of 30, and a take profit could go right down to about 110 to the downside. So just based on setup, based on possible profitability or overall profitability, I think that seems to be a nicer setup to look out for, because we're going to see a lot of, as we go through the other pairs, we're going to see the dollar weakness scenarios come around a lot more. So we're going to see that. Okay, does that make sense? 6540. Let me just put that one in first. Right, dollar, Aussie dollar. Look for reaction at 0.6540. A breakthrough, then you'll look to buy at 0.6560. Ooh, am I right? 6560, 30 to 70. Stop loss 30, take profit 70. Or a rejection. Then we'll look at a sell at 0.6520, 30 to 110. There we go. There we go. Okay. All right. Now. Then we look at the pound dollar. We talked about this. A couple of us looked at the pound dollar since last week. It's popped down a little bit and then it came back up. Right. A couple of us looked at it, looked at the pound dollar since last week, and we were looking for it to break out, break above 1.36. We got that big upside potential. It's gonna be great. And that was on Monday last week. And then we waited on Thursday. With the ECB rates decision, we saw the pound dollar push up and we thought, oh, it's gonna break. And then it came right back in again. Non-farm, we know what happened. It came right back in. Right. And so on Friday, we were like, I'm gonna give up on waiting on the pound dollar. But I don't think it's all lost. All is not lost on the pound dollar now, because all is not lost on the pound dollar now, because what we are looking for here is a continuation, right? Big trend line to the upside. You can see that even from April that we started, test, bounce this way, a continuation up, breaking above that resistance, above that 1.36 level. That's something to look out for. Where could it go to? Beyond 1.3, let me go to a daily time frame. So beyond 1.36, you'll be looking at maybe even 1.3730, which, coming back to it again, is what we're looking for here, right? Go, there we go. 1.3610 is what we're looking for last time. Stop loss is about 40. Take profit is about 120 to the upside. Pound optimism, let's go. Robbie says that's something to look out for. Needs to close above 1.3610, 40 to 120 to the upside on pound optimism. Bearing in mind, they do have employment data coming out. It's gonna be a little bit weak. So I'll bring about some weakness, but it looks like they're not gonna do anything on rates. Unlikely to do anything on rates. It could cause that to push back up, right? So I forgot what I was going to say here. I think it was a buy at 1.3610. I think we were looking for a stop loss of 40. And I'm pretty sure we're looking at a take profit of 120 to the upside. What do you think? Pound optimism. Are you gunning for it? Are you hoping for it? Are you looking for it? Let me know. Let me know. Let me know. Put it into the chat. Are you thinking of that pound optimism? Okay. Then on to euro. Okay, the euro trade. This was one that I did on Friday, right? So I did a bit of a sneaky thing. I wasn't really up to trading the euro on non-farm. So I didn't want to trade. I wasn't feeling up to it on non-farm before the news, right? So before the news, this was at the 7 o'clock hour. When it finished, I looked at it and I thought, okay, I'll move this aside first. I look at it and I thought, okay, it's pushed down. It shows a little bit of a possible rejection. So at 8 o'clock, I got into that trade. Just on the close, I think it was about there. I think my price was at 1.1425. There. I was looking at that. I was like, okay, it looks like you should, let's see, 140. We'll see some dollar strength. We'll see it come back down. Stop loss, I had it a little bit wider. I had it at 30 pips. I had it at 30 pips. Then my take profit, I didn't go that gung-ho down to 60. I had it at my 35, 40, 40. Was it 40 or I think about 40 something pips. Can't remember, 45, I think. Ah, yeah, down to this point here, right? So I just sat and just let it run, and then it just popped right down and closed me out at 45. So I was very happy about that on the euro dollar to the downside. Okay, so that one's all done. Take that one away. So that was my only trade on Friday with the non-farm payrolls, the non-farm employment change. Don't need that. We don't need that anymore. Again, like I was saying, that dollar, that's why we looked at the Aussie dollar on a possibility of dollar strength coming back in, that possible rejection, because Kiwi has been on dollar weakness. It shows now. The UK, the pound dollar has been on dollar weakness to the upside. The euro dollar, it just looks like it's going to have that crossover for that dollar weakness, or due to the dollar weakness to the upside. Straightforward, you're looking at 1.1460. You're looking at a stop loss of 30 pips. You're looking at a take profit of about 100 to the upside that way up to this point. So I think it suits the eye. These are the kind of trades that, or kind of setups that suits the eye. 1.14 something. 60 30 to 100. 100 to the upside. Okay. Yep. If it all makes sense, let me know. Again, big reminder, help me out. Click that like, click that subscribe button if you haven't already. That thumbs up does help somehow or rather. It's a weekly swing trades setups. Okay. Then we look at the yen. Yen was a little bit surprising. I didn't think. I would have loved to get into this trade to the upside. I didn't think it would have gone up that much. So that's why I was deciding between the yen and the euro. I went for the euro on that dollar strength scenario because I thought the yen might have been held up by that 50% retracement level, which it didn't, right? In fact, it even got right through that 61.8 or slightly through that 61.8, and then it was also a Bollinger and then it started coming back in again. So that's done. Take that one away. That's done. Take that one away. We talked about this on Friday. Big downward push. Then we have that channel to the upside like that. Now it's breaking the channel, so we've got that arrow to test and reject and push down. I'm keeping to this. I might actually, depending on how this candle close, be looking at getting into this trade, this setup as we talked about. Maybe not at this, well, definitely not at this price of 144.20 because it's kind of gone past that already. It's still nice, setting up nicely on the Bollinger. It's crossing over to the downside. This is the kind of trade that might be something for now. Pound yen and another pair. If I enter US yen and another yen pair, my overexposed depends on what size you're entering at, buddy. If you're entering 100 lots on yen, on US yen, and one lot on another pair, yeah, you still would be overexposed. Depends on your size. Size it down, size it by half, you get into both. But then you also think about why you want to get into the other pair, right? I think that's fair. I think that's fair. Which other pair? Which other yen pair was it? Let me know. Okay, yeah. Yen, yeah. So maybe even below 144, you have space. You don't have to rush this. You have 144, you go to 45 pip stop. You have 130 to the downside that way. Let it play out. Let it play out, and that's what we're looking at there. Okay, so this is a revision. If you missed the one we talked about on Friday, or you're missing now, which I am because I'm on the stream, if you're missing that now, then we're looking at about 144. We're looking at stop loss of 45. We're looking at a take profit of 130. And this is the kind of trade that I like to do. I'll do it as smaller lot size, right? I'll do it as smaller lot sizes so that I enter and let it run. And then I go on my trip. I go and not worry about it. Come back, and then either I hit a stop loss of 45, which is not terrible, or I hit a take profit of 130, which is fantastic as well. So that's kind of set and forget kind of trade that you can do. In fact, actually, I think you should just do it at 50. That's 5 pip difference. I think a 50 pip stop on that will be more reasonable. Pound yen. Just so Robbie just said pound yen, most probably pound yen over euro yen. Okay, we'll look at it. So I've got my US yen there. Euro yen, we looked at up, but it's just gone up, and it's pushing back down. I think it's a good choice if you didn't get into the euro yen because it's popped up. It's a little bit late to get in now. I would say that we'll keep our view from before at 163.90, stop loss of 40, take profit 90 to the downside. It's right in the middle. You don't want to get in there because if you get in there, your stop is going to be awkward. Your stop loss is going to be quite awkward. And that's the 50% level that you wanted to break before you get into that trade. Right? And then you're looking at it also breaking that 23 from that longer term, breaking that 23 straight down to your 50 area. So give it space on that one. Does that make sense? I think that's what I'm looking for on the euro yen, which is it breaks below this area. It breaks that nice 164 round number. It's coming down anyway, right? And then you're looking at 163.90, 40 to 90 to the downside. 163.90, 40, 90 to the downside. We'll keep that one. Okay. Then on to euro yen. I know now. I remember now why you're thinking of the pound yen. Sorry, the pound yen. We talked about a zig and zag and a zigzag, zigzag all the way up. That didn't trigger. Take that away. It's set there and it's pushed up. Okay. That one's done. Take that away. We don't need this for now. Okay, we don't need this. So that channel is there and it's working. Okay, that channel's there and it's working. That's up there and that's 23. Okay, so I know what you mean now, Robbie, what you're looking for. You're looking at that point. And possibly all the way down to this, no, down to that 50 here. Like that. I think that's fair. I think that's fair. I would say that you look for it to break past, not huge, 195.20. You're looking at about that way. You're looking at about that way, 75, 70 to the downside, and a 35 that way. I kind of want to see this a little bit wider, but I think if it's too wide, it kind of defeats the purpose as well. I think that's fair. So let me put that in first, 195.20, 35 to 70. Forgot now. 195.20. Okay, what? Okay, hang on. I'm losing my numbers. 195.7.20 stop loss. I don't want that. Okay, 35 to 70. That's fine. So now, based on your question there, Robbie, of whether you should do both, would you be overexposed? I think that it's I think it's a sequencing thing. Right? I don't think you end up entering both at the same time. It's quite likely, looking at the way it's moving, that you might even be entering the US yen earlier. Right? Maybe a drop past, or pause at a little bit, or drop. You have that so-called security where you can move this to break even. Then you look at the pound yen where it's come down and it's breaking that level, then you get into that trade. So I think it's about sequencing. Again, depending on your sizing and comfort level, I don't think it would be a overexposure. Make sense? Okay, cool. Now on to the US Swiss franc. Pop, pop, bounce around. It's done that. It hasn't done anything that fancy. Remember, we've got the Swiss with the Swiss National Bank with their rate decision. Are they going to be the first one? 2-0. Even if they are, it hasn't done too much within that range. So this is what the Swiss does. It has that range, and then it pops right out, and next one comes right back in. In a similar fashion, it's got this range, right, where I don't need that actually. So it's got this range, it popped out slightly and came right back in. It's got this range where, yeah, I do think that there's a possibility it's going to pop out, right? It's going to pop out maybe you come down, test quickly, and then push back up again. So because we are thinking of, because we're thinking of that possible dollar weakness scenario and then maybe a rebound, the US Swiss franc, maybe we can also be looking for a similar move where we would say 8155 stop, 40 take, 110 to the downside. Super, Robbie. Let me know how that plays out as well, or keep me posted. 8155, so we're looking at something similar here. Yes, it is. That's a bit of a wider range. That's a bit smaller, but it looks like the similar kind of move. Expecting the dollar weakness to play out. So 8155, 40 to 110. Oh, wait. Sell at 0.8155, stop loss 40, take profit 110 to the downside. Okay. Then onto the Loonie. We talked about this. Don't need that. Okay, guys, remember, help me out. Click like, click that thumbs up button if you haven't. Click that subscribe button if you haven't already. Inverted head and shoulder didn't, well, played out, but not as much, and then came right back in again. Take that one away for now. Don't need that at this point. Okay, that way. Trend line is holding it down. That doesn't do anything for us. Oh, okay. I think that's fair, but I want to kind of see that point first. So if that breaks down, catch this body. So you already seen it test, come back in. So I kind of want to see it do that. All right. So again, on that dollar weakness scenario, Bollinger, I'm sure it's okay. Okay. Where we would be then looking for 1.3630, stop loss of about 40, take profit about 80 to the downside. It's gonna get tricky on the CAD because at this point was last year October. I think that's fair. I think maybe what we could see play out would be a long-term move, like it says there, test this way, then we see a good retrace right back up. Okay, 1.3630. I saw a question there, Sunil. Let me put this in. I'll get to that. Sell at 1.36 something. 30, 40 to 80. Okay, 1.3630. Stop loss 40, take profit 80 to the downside. Okay, Sunil saying he's long US yen for 164.14. Should I exit? long US yen looking for 164. 146, sorry, 146.14. I was at 164. 146.14, which is up here, that previous high. I feel like it's gonna come down. So I would have loved to see it test and reject 146.14, but it looks like it's gonna come down. I don't know where your stop loss is. I don't know where you entered. I feel like it's gonna come back down a little bit more first. So depending on where your entry was, depending on your stop loss, maybe I think it'd be prudent to exit. Again, disclaimer: your decision and all that kind of stuff. All right. Wait. Gold zigzag dropped right down. So we talked about this on Friday, where we said gold looking for rejection of 33.70 trade down to 33.20. It did that. This was the news. It popped right down to 33.20, went as low as 32.94 before now showing some push back up. And remember, if you remember, those of you who have been watching on a daily basis, I said it's coming down, but I'm not keen to sell it down, right? Because of that big upward trend, I'm not keen to sell it down. What I would prefer to do is to wait for it to drop and then look to get into that buy to the upside. So hey Lestin, how you doing? So short-term move to the upside here, you see that we have seen it test and bounce off 61.8, indicating that upside move, again supporting the thought that the dollar weakness could bring gold back up. At this point here, oh my, it hurts. Okay, we don't need any of that. Right, it's breaking above the 23.6 level and also these kind of levels here. So that's what we're looking for. So again, round it to the nice, a bit of a round level here. Above 33.30, we'll see it, well, we could see it get up to to 33.50, and then also, okay, so gold, we're looking for it to break above 33.30 to trade up to 33.50 and 33.60. 33.60. Do I think that we could see another break higher? I think got too many lines here. I think that's fair. Can it come all the way back up? I think the highest it'll get to, or it could get to, is 3,400. Obviously, after saying that, I probably jinxed it and it's going to go all the way back up. Actually, I'm interested to see if this plays out. If that plays out that way. So, bottom of the channel. There. Bottom channel, top, Down here, not a great channel. Looking for that to break back up. So that's what we're thinking there. On the on gold, break above this point. We could see trade up to here, pull back in a little bit, test 61.8, pull back in a little bit, and maybe test 3400. There we go. Diana says, I'm actually looking to sell, but watching the level of 3340. 3340, okay. Fair value, if it goes above and retest 3340, I'm going for long. If it stays below, yep, fair. 3340, 3342. If it breaks past that, I think this one can be that quick trade up to that 3340 level, right? Then if it gets past that point, you can look for it to the upside. If it stays below, yes. So the alternative view is that I think the current momentum is going to see it push back up. I think it could even get to 3350. Then it's going to, if we see that push back in that way. But it all comes down to what this guy is doing, and it looks like, not trying to jinx it, but looks like it could push back down. If this pushes down, then we're going to see this climb up that way. So yes, again, that 50% is the crucial level on gold. Oh, I agree with you there, Diana. Okay, so yeah. Any other questions? Let me know. I hope you found this session interesting. Good setups that you yourself have highlighted and you're thinking about, aligns with your thoughts and processes. If you do get into a trade, let me know. The link for join the mailing list, the other links will be sent out to you. Remember to click like and subscribe. If you want to join as a member, click that join button on the side corner there. And yeah, I hope you had a good session. I'll see you all in a couple of weeks. Oh, Swiss yen. Okay, we'll do that one. Swiss yen. So we did that. We were looking for that rejection on the Swiss yen, which didn't come around. So we don't need any of that. So that didn't reject. It came back in. Big upside there. So that's a support. Thanks, Rita. Thanks, Jimmy. We're not done. We got Swiss yen. I like it. Wait, let me think. Dollar, yen to the downside. Gonna drag that down. Swiss. If it does drop, if the Swiss franc does drop, then it could signal a little bit of, as much as it dropped because of the dollar weakness, it could signal a little bit of Swiss strength, which could push it back up. The thought is that I want to see it come back in, but I kind of think that there is maybe a little bit more upside to go. Right? So I'm thinking maybe it might do that around there. So I think like how we were looking for reaction there, we're possibly looking for the reaction here at 7530. If it can bounce off 7530, test and bounce off, then we could possibly see it do 7540 that way, which is huge, So that's a simplified thought, is that maybe we see it do that, 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 something like that to the upside, because I'm thinking of that level there. And if you actually look at it this way, you might actually see a bit of that trend line holding it up. If it passes 176.30, 176.30, you look for a long. Yeah, oh yeah, for sure. For sure. If it just sits there and then it goes past 176.30, yes, look for that long to the upside. That's straightforward. That's not a thought at all. But I'm kind of thinking that the dollar yen might drag it back down. But then the weakness on the US Swiss franc because of dollar could push this back up. So yeah, straightforward view is it sits there and breaks. You got the upside move. But I'm just thinking of that retrace before I push back up. Need to retest back that 176.30 US days. Yeah. Test, bounce. Okay. Makes sense. Thank you all so much. Hopefully I can get some nice videos and pictures or share it in the Discord group. But hey, please trade well, trade safe, stay tuned. I will be back. Take care, everyone. I will see you all sooner rather than later. Take care now. Bye bye.